this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Happy Monday, everybody! Things are melting down as expected. So this is pretty sweet. A lot of us on the Pro channel are definitely enjoying this move down. It's a very profitable move to the downside. We've been waiting for this for a while now, almost about 7 days. So things are definitely maturing. Before we get too far, if you haven't subscribed at cryptoinfluencers.com, please do. You might as well be on the free channel for sure. And then if you're curious about how to manage risk and how to navigate some of these markets, one of the coolest parts about the Pro channel is that you've got about a bunch of people that are very level-headed, chatting about how, about the moves. We're not just throwing things out there. We're talking about why. And so that's what we do every morning on the Pro channels. We really analyze Bitcoin, see which way we're going, and see how that impacts the portfolio and where our risks are and things like that. So anyway, so you got that. The other thing is we have Wednesdays. We have a live stream on Wednesday. It is at every Wednesday at 12:30 Mountain Time. It's been kind of a coin toss whether I'm 5 minutes late or not. Just taking kids to school and whatnot. So that's also happening. Okay, and then before we get too far, I tweeted this out last Saturday, I think. Yeah, it was Saturday. And I said, Ethereum's about to make history tomorrow. And I think a few people are confused by this. So I think today we'll start here. Ethereum. Let me just refresh the whole thing, see if we can get a fresh view at what's happening. This website is called token.unlocks.app. And this shows a summary of Ethereum since the Shanghai unlock. And what this does is at this unlock, it allowed all of the people that had Ethereum staked on Ethereum 2.0 to withdraw their stake. And here you can see that 2.45 million Ethereum have been withdrawn from staking. And look at the amount that have been deposited. 2.48. That means that even though there were 2 million Ethereum waiting to be withdrawn, more than the amount withdrawn has been put back in and staked freshly. So this net staking balance since the fork is a positive 27. This has been negative ever since the fork. People have withdrawn more than we've deposited. And now, look, there's only 146,000 pending withdrawals. So if this all came out in the next 1 minute, we would be negative by 125,000. But then that's the bottom of the barrel. There's no big rush for a whole million Ethereum to come back out of this. And so slowly our net staking balance is going to increase. That means more and more Ethereum is getting tied up into staking. And the people staking are making 5.3% more Ethereum every year. So if you had 100 Ethereum at the beginning, now you'll have 105. And the value of this is going to be, well, the additional 5% that's going to the stakers is not more than the amount that is being burned. In fact, we are absolutely skyrocketing on burning. The gas fees are so high that every transaction is getting a portion of the fees burned. So the net supply since the merge is about 194,000 Ethereum. So if I go just the last 30 days, so we'll just pretend that, so this merge happened April 13th, so we're not 30 days in since the Shanghai upgrade happened. But if I go here, the supply change has dropped by 112,000 Ethereum, and people are gaining an additional 5% Ethereum on an annual basis. So there's more Ethereum flowing in, but the net money supply is lower. So the people staking are making money. And that's why this number is getting higher, and it will continue to get higher, which makes Ethereum more scarce. It's tied up. And people are buying Ethereum just to stake. So there's going to be buying pressure. This will happen in the long run. In the short run, we're dropping, but there's an amazing amount of fundamentals burning under here. So I'm licking my lips, looking for opportunities to get back into Ethereum and go long, because these pullbacks are temporary. We're in the year of the chop. Things are up, things are down. Things don't go straight up, things don't go straight down. So the net result is I'm looking for opportunities. So anyway, that explains my tweet. This is the first time we've seen this, and it is awesome. Okay, let's go look at Bitcoin. So we got a little fake out last week where we closed from green to yellow, and usually the first time we touch the green zone, we are going to yellow. We've done this research on this channel. About 7 days is about the average that you touch the 50 and then you flip to where you lose the 50. Well, we got faked out, and we had 1, 2, 3 touches. We had 2 that was above, and this move was a very, very interesting bull trap. So we'll discuss this a little bit more. But after we pulled back from there, we not only we closed near the bottom of our channel, which was below the 50, and now today we're absolutely breaking down. I'm expecting this. We've been expecting this for a long time on this channel, and I have a very big short on Bitcoin. I am definitely expecting it to continue. So from the research we did before, the drop from the 50 to wherever our bottom is usually happens within the first 7 days. So if we're in a bullish market and this is simply a pullback, then we'll get a pullback that will last perhaps anywhere from 3 to 7 days. It can sometimes happen the next day. This is a pretty good drop, but we're not there yet. The reason this is not the official drop is because this entire move is straight up. Our first kind of attempt at a swing low was here. That was it. These are straight up. So we had kind of hit a high here and a higher low here, higher high here. Actually, this wasn't even it, because this whole move moved all the way up to this point here. And then we pulled back to this point, and this point was slightly higher than this low. So we're still angled upwards on our move. And so we pulled down up to here, and then we pulled back to another lower high. So this lower high is the momentum shift. This is what we've been watching for. I thought this was going to be the bull trap, but we got a double bull trap. It was very, very, very hard to read on Bitcoin. It was really hard to read on Ethereum, because this could have been our bull trap and it could have fallen off. But we had this wild day where we went up $116, and this became our bull trap. So whenever you move really strongly and you haven't had a rest, a lot of times there will be one pretty good fake out before the market flips out. And this market has not dumped. This line is intact. So this formation is not complete. We still have a drop to go. So if you think that, oh good, the worst of it's over, it's not. It's not. And same here. Our low that we're watching for is this close, and it's 27,262. Wherever this closes, it's got to be lower than 27,262. We're probably not going to get it today. So tomorrow could be fireworks, because if we actually start threatening to close below this, we're probably going to lose this support line. And this support line is very, very close to the 200. It's close to the 100. we could have a pretty good firework day tomorrow. If we were to just go down mildly and drop it to our line, it would only be a 2% drop. If we went down to the 200-week moving average, it would be a 5% drop. If we were to go down to our actual first line of support, it would be a 10% drop. This is highly possible. This is a 24,800. We've talked about this number for a long time, and we're probably going to get a number in here. At the very most, the most optimistic is that we hold the 200, but it's Monday. So think about that. Today's Monday. That means we've got 6 more days on a week that we could fall pretty strongly and pull back up and still close above this and get all the support we need for the next move. So this could be a pretty good drop, but it could be minor. We may be on our way out in the end. So yeah, this is a pretty solid move. We're definitely, this bull trap is looking extremely likely now that we're down playing in this area. But if we get even below, then we will have a pullback, and that's what we're looking for. We're just looking for a pullback of some kind to give us some levels of support. And all right, so back to our measurement, because this is what now that we know where the yellow zone started, where the 50 broke, we will be able to test where our levels are at the most mild drop, the most mild exit of the green to the yellow zone. We have seen a 10% drop from our breakout zone. If I drop it down to 10%, we are looking at right there. Whoa. Right here. It's about 25,700. So this is very, very likely. This is extremely likely. I would say that getting support off the 200 would be our absolute best case scenario, and dropping to here over the next few days, very, very likely. We could eventually have our next move up, which could be pretty good, but this is the rest we need. This is where we're going to intersect all of our wicks. We're going to get some pretty good support off of something like this. If we really dug deep, I think this was the best case scenario. The average case scenario is that we drop to 15%, which is down to here, 24,250. 24,250. If that sounds like impossible, just remember that our breakout level on our inverse head and shoulders is at 24,313. So if we closed here or wicked down to here through the week, it would be completely normal. We would still be bullish if it dropped that far. So that is some pretty significant perspective on this. So, but yeah, all we need is a touch. We don't have to fully close down here. We don't have to get anything crazy, but a perfect flip from resistance to support includes it goes anything less than, but leading all the way up to a body of the candle closing at 24,264. So that means wicks could get really low. One thing you'll notice is that, and we've been watching this for a while because we just had our weekly close, this is day 50 right here. So we have this week and next week, and after these 2 weeks are in, our next average is going to be it'll be replacing this line. So as long as we're above 26,570, our 50 is going to start sloping upwards. This is major move for our bull market. We're in the year of the chop, so we're going to be up and we're going to be down. But if we've been hovering up here long enough and we are starting to get to where our 50 is curving up, we are starting to get some recipes for a pretty sweet changing market. So there's a ton of bullish stuff here. We just have to deal with this pullback. And that's all it is. It's a pullback. I don't think the world's going to blow up and we're going to start getting down into the 19s or something. That would just be, I can't even imagine that at this point. But we are in for some pain, if down is pain. So those are some pretty interesting things. For a bull trap to materialize, most bull traps will have some kind of a high, and then you'll pull back into trading range, and then your next high will not be as high. So I was expecting this to be our bull trap. I entered my short here, and once we had an exit of the yellow zone, I doubled my position right in here. So my average short position is just under 29. It's 28,800, something like that, right in here. And so this position is looking pretty good today with the drop that we are seeing. Well, this bull trap, I expected this to be it, and when we pulled back up into it, it was definitely one of those things where it could have gone either way. I had a declining resistance here, and we could have pulled up, we could have found it as support, and we could have moved up. So this was very hard to read. Oftentimes, when your bull trap is in, it's over. Especially when you exit the green zone. Like, there was a lot of indication that we were going to head out here. But this drop, this exit of the 50, gave us an additional about $400 more on the 50. So the 50 was able to increase by $400 more, which makes the decrease, the fall a little bit less impactful when we get that 10 or 15% drop. So, but this was interesting. Right here, things were a little bit uncomfortable. And so, but yeah, just the shape of the chart, how we're continually going up, I still felt like there was a greater than 50% chance that this was going to melt down. Where I would have been a little less inclined to leave my position the way it was is if we had lost this level here. If you pull up to a level and then you struggle and then you start closing higher than this, you've got a continuation of some kind. And it could be minor, it could be another fake out, it could be a small one, or it could be serious and you don't want to expose yourself to that. So I had to be careful. But I stick to my guns, and we are pulling back exactly like we were expecting way back here. Now our prices are much lower. Big sigh of relief, we're doing good. But Ethereum is a little bit different. It's just a little bit different because nothing's where this low happened. We have this low where we haven't done that, and we haven't done that on Bitcoin either. We haven't gotten below it. Well, actually, okay, I'm sorry. In this case, we are below on Bitcoin, but we're not on Ethereum, and Ethereum is still in this range. It's interesting how these ranges came because we have definitely found resistance on this range, but then we just completely dropped through here. And you've heard me talk about resistance before. If you get a candle that breaks a line and then the very next line closes back under it, it becomes resistance. This is the equivalent of a wick. And so this line is not broken. As crazy as that looks on this channel, on our trading level. So on Ethereum, this is still holding resistance, very strong resistance, which also brings our number down. So wherever we find support, wherever it ends up being, it's going to be this break that will spur the next move to the upside. So it's not the resistance line here, and it's not this top here. It will be this one that creates our momentum. Like, we're going to probably see momentum coming off of this break just because we are consolidating so much here and we are resisting this line for a long time. But this is very, very fascinating as a chart technician. But you can see how we haven't broken down yet. We're still hovering, and our support line right here that was resistance and now is support is fully intact. Our absolute resistance was here, and when this broke, we've kind of been ranging up in here and pulling back a little bit. A pullback to this level is what we're after, and this is where I'm long. So I neutralized my position when we exited the yellow zone here, and so my position is neutral. I've got an equal long and an equal short, and I'm going to close my short when we get here, and I'm going to leave my long. The reason I'm expecting to do that is that I'm expecting this to hold. I'm expecting that this line will hold. And it's definitely not coming down as fast as Bitcoin. So there's some reasons why Ethereum is not coming down as fast as Bitcoin, and it's visible in the Ethereum to Bitcoin chart. Look at this. Ethereum to Bitcoin has been, we flipped from green to yellow back here, and then we've been all over the map, but we've kind of entered and exited a period of red zones. And right now, we are exiting a red zone. When we exit a red zone, it's usually a pretty strong indication that there is some upside happening. We had a couple of fake outs, so it's not guaranteed every time. But especially after you've been in one for quite a while, this is starting to give us a sign that Bitcoin's going to be losing value faster than Ethereum. So if Bitcoin drops faster than Ethereum, then Ethereum's the safer play for longs. And we have a massive breakout of the red zone here, and we hit our first level of resistance, which is usually the closest average, and it hit this 100 perfectly. And then we came back down, stopped right above it, had a candle to show support, and now we're lifting off of it. So there is a lot of really good structure on the Ethereum Bitcoin chart to say that Ethereum is going to start outpacing Bitcoin for a while, which would be nice. And because of this, our Ethereum dominance, our Bitcoin dominance has completely stalled out. It's dropping slightly over the past couple of days. And once it drops, if we ever drop further, it could be a game changer. The year of the chop, especially if Bitcoin starts moving up, Bitcoin dominance can take off. But if Bitcoin starts ranging and people get bored, they start looking for other things to buy. That explains the Pepes and all these these meme coins that everyone's buying. It's because it's stalling out. It's not as fun and exciting, so all the impatient traders out there are looking for other ways to lose their money. And so they're buying meme coins, and Ethereum's benefiting from the strength that's flowing into the alts because of that. So Bitcoin dominance is stalling off, and if it stays level or starts dropping, then Ethereum and the alts will actually come out a little cleaner than the drop that Bitcoin's going to do. So I currently have my Ethereum position neutralized, and I have my Bitcoin position in a pure short. So it is completely open to the downside. So any moves to the downside are profitable for my particular portfolio. And we're only on day 2 of the yellow zone. One final thing I'm going to do, because I know I've been going on for a little too long on this, but I'm going to zoom out, and we're just going to look at scenarios where we've been in a pretty decently sized green zone, and how long does the yellow zone last? So let's just take a look. I'm going to zoom out just a teeny bit here. This was a very strong green zone, but this is the top of the bull market. We did have a fake out, so we ended up back in the green zone for a bit. This yellow zone was 62 days. I don't think we're going to do that. And then by the time we actually started showing strength, it was like 75. Yeah, I think that's a little preliminary, but let's test this one here. Because this was so let's see, this one lasted a month. I've been saying that this drop will probably take us a month to recover from. The bottom usually happens in about 7 days. So if we pull back really hard, usually in 7 days, we're going to be about there, and then we'll start kind of oscillating, finding strength, and then we got our next move on our plate. Let's see. Next one. This was when we got way too excited. This is a little bit of a fake out. But see, this one was where this was a third bull trap. That was pretty brutal. Reading that one correctly, was, you have to have this breakout above this level in order for it to be a continuation. And there was really no break. There was no good support here. Just a little here, but a huge gap here. So the structure was really upside down. I'm not even sure where to draw this. About 48, so about a month and a half. In a better case, it could be potentially 20. So these yellow zones, they're going to last for a little while. In the case we're just marching our way up into the bull market, I feel like this is kind of this is the season we're in. This is probably our most realistic example. So let's take this one. We were out in 32 days. Yeah, this is probably our best example because this is the bottom of the bear market. We had a lot of wild chopping. We moved up off the bottom really well. And when we finally had a loss of the green zone, we pulled 32 days of a rest. And then this is probably our next one. So this should inform us pretty good, about 40. So we're in for a month of down. Our selling climax will probably happen early. I'm thinking a week, and then about a month to just over a month of some sideways oscillations and some kind of time to heal from whatever the market's about to drop on us. This move down is going to be pretty intense, though, for those that aren't prepared. But yeah, I still see a lot of support around the 25,000 level. And the weekly shows a little lower, like 24. The monthly still shows pretty good support. I would expect even the 50 could be positive. It could be potentially 23. There's a whole world down here that we could drop to get support, but these things take time. So I'm expecting about a month of red. So if our current red month has 23 days left, we're probably going to have a pretty ugly solid red, and then who knows if we wick or if we pull up. But this is getting, it's maturing. We're getting there. Things don't just go from the bottom to the top all in one shot. We've got a lot of months to consolidate and figure things out. But feeling pretty comfy. I kind of gave this channel probably about 2 weeks worth of warning on this move. So we'll just see how intense it is. With that, I will leave you. I hope we have an awesome week. But we'll catch you tomorrow. And if not, we will see you live on Wednesday. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.